Welcome back to the Elliott team at Bob Hayes Realty. This is Adam. I'm Jim. We're here today at American Mortgage Company with Keith Kaufman. He's a loan officer here in Louisville, Kentucky. And we're going to discuss a few things. Right now today, I think we're going to talk about just market conditions current. It's March 15th, 2022. The reason we say that in this video is because some of this information changes pretty regular, and so we want everybody, if you're looking at this video a long time in the future, we kind of got to have a reference so
That's right.
you know what we're talking about and why the conditions are what they are. So we're going to turn it over to Keith right now to talk a little bit about the market. But before that, real quick, I wanted to say something. You know, a lot of people talk about interest rates. That's one of the first things everybody brings up when they're getting a mortgage.
Right.
When I bought my first house, it was back in the 80s, and in 1981, the average interest rate was 16.63%. It was brutal to buy your first house, and especially when you looked at your amortization statement and saw how much interest you were paying.
That's right.
So by those standards, even though interest rates are changing and creeping up just a little bit, it's really pretty solid still. And it still keeps things affordable from a borrowing standpoint, and that's kind of some of the things Keith's going to go over with you. So we're going to turn it over to Keith and let him talk about the market conditions.
Yeah. Like you say, Jim, we have to look at the big picture. When you hear an example like that, obviously we live in better times, at least as far as interest rates go. You mentioned 1981. I started this business in 1996, and the rates were over 8%. I think they got up to 8.5% that first year that I was in the business. So when I remember those days and figuring out payments for folks, they weren't as good a time. So even though rates are up a little bit from the absolute bottom, which was last year, I don't know that we'll ever see those rates again. It was incredible, but in the big picture, like I say, they're not much above that floor. So it's just something that we calculate and look at the big picture, and the home ownership is what we're after, and it's still affordable. So that's the bottom line with it.
So in today's world, our average rates running in at 4%, 4.5%.
Yeah, they're in the low fours, depending on the program, depending on credit score. The low fours, 4% to 4.25% right now, in that range, and that's with no points, excessive things. That's another thing, if I could bring up, is when one calls around to get rates or shops rates, there's a lot of games that can be played, especially when you're dealing with an out-of-town lender. Some of the larger lenders that you might see on Super Bowl commercials and so forth. What's your rate? Oh, I'm at 3.5. Well, they don't tell you that it might cost you $7,000 to get that rate. You've got to look at the cost, look at the APR, look at those things. If I'm going to quote somebody a rate, I want it to be affordable for them. And I never put points in there unless they're asking me for that. So
what does you say ask for that? What do points do for that buyer?
Yeah. So if a person had a plan of never leaving their house, I'm going to be in this house 20 years, and they wanted to get the absolute best rate possible, they don't mind paying a little extra for it. They might say to me, Keith, if I buy it down a point, what will that do for me? So basically, a point would be 1% of whatever the loan amount is. So if you're borrowing $200,000, it'd be an extra $2,000 in cost. And then at that point, you look to see what that would save you over not paying points. So, if it was 4% and then you bought it down and it was 3.75%, what would that mean on a monthly basis? And then you've got to look at how long it would take to recoup that cost. Usually when you're doing that, it's going to take you at least 7, 8+ years to recoup that.
Again, like you said, somebody that's going to stay in the house a long time, it's just a math problem to say, okay, if I'm going to stay there 20 years, and I know I am, then I'm going to save. If I think I might move in 5 to 7, it wouldn't make sense at all.
Right. And you have to think about, what if rates go down? What if I was to refinance? What if I'm going to do something different in 5 to 10 years?
Yeah, very good point.
Then you may have wasted that money buying the rate down. So,
and that's all something that they would discuss with you, and they can discuss with you their options with that.
Absolutely.
And figure out what works for them.
I could probably count on at least two hands how many times somebody's bought the rate down and wanted to do that in my 25 years. So I usually advise against it, but I'll do, if that's something that interests someone, and I'll certainly give them the numbers and let them decide.
Okay.
Give them the pluses and minuses. As far as the market conditions, it's always a crazy world. There's always things going on. It seems like this particular period of time is more volatile, more interesting than most. Things have been relatively calm as far as interest rates and so forth, but the last couple of weeks it's been very volatile with the war that's going on in Ukraine, inflationary fears domestically, gas prices are up, a lot of those things going on. So I mean, we've seen swings, an eighth and a quarter on per day in either direction. So it's been interesting. So it's been volatile. It's we can't lock until you have a contract. So you want to get pre-approved in the beginning, and discuss locking whenever you have a contract.
Okay.
Yeah.
And by locking in, you're telling them that when you get that contract on your house, accepted contract, talk to Keith and he will lock in that rate so that that's what you're going to get.
You'll have that rate for 30 to 60 days, depending on how much time you need, and you won't have to think about rates going up. They could go up 5% during that period, and you won't be affected. Your rate will be locked in. It's like buying stock on a given day, or filling up your gas tank on a given day.
Yeah.
That makes sense.
That's scary sometimes.
It may not be quite that volatile at the moment.
So Jim and I just finished up doing a series on first-time home buyers. What are some things you could tell some of our maybe first-time home buyers, or maybe somebody like my mother who hadn't bought a house in a long time, that's going to go out and buy a new home?
Sure. The main thing I would think is that, it's always been told, I think, of folks that they need a down payment. They've got to have a certain amount before they can get pre-approved or buy a home. Certainly not the case. There's down payment assistance that's available. It's always available, and that's something that can be utilized. We are primarily a purchase lender, so refinances kind of take a back seat in some regards with our company. And that's so that we maintain the service that we offer on a consistent basis, and we're able to get things done quickly ahead of market really. So there's basically three pieces to getting a loan. You got to have the credit piece of it. We run credit scores, make sure that everyone has that minimum credit score that's needed for the particular program that they're interested in. Capacity, you have to have the ratios have to be in line with what you're buying. Basically being able to afford what you're after. And then the collateral of the house, the appraisal's done to make sure the house is worth what you're paying for it. So those are three of the big pieces that go into that. Like I say, I want to stress the service end of it. The way we do business here at American Mortgage is we take the application up front, we get pre-approved in the beginning, and all the work is kind of front-loaded. Right now, our underwriting is 1 to 2 days. Basically what that means is I gather everything, get it on the system, electronically gets in line with our underwriter. This is the actual decision maker of the loan. The one that goes through all the guidelines, checks it against the loan, and gives you an official approval. And at that point, we wait for inspections, we get the appraisal and title work, finish up any conditions we need. And, if we don't have to wait too long on the appraisal, we can be ready to close within a couple of weeks. So we stay on target in the beginning, and it takes all the stress off of it. Makes it a lot more fun process when we're not procrastinating, waiting till the end to get things. And we try to discuss that with the borrower in the beginning, so everybody's having a lot more fun.
Yeah, on the same page too.
Yeah,
I mean, it helps.
which is a big thing with me and Adam. You've heard us talk about this before, that we feel like the local lenders have a lot to offer you.
Yes.
And not just shopping around on the internet for a low interest rate. The local lenders, especially like what Keith is just telling you, the communication with Keith, the speediness with which he does his thing, he knows what he needs up front. So when you get pre-approved, you're in pretty good shape. And then all you're doing is working toward closing. He sends that off to the underwriters, and he's got most of the ducks in a row before that ever happens. And then he'll be really in touch with you throughout it, and with me and Adam and you. You'll know what's going on, and he's not going to bug you, but he's going to communicate with you promptly when he needs to, so that we get to that we're ready to close. And then we're all sitting here waiting, and we're waiting for the sellers to be ready before you even have
That's
a closing.
That's the goal.
Yeah, that's it, and that's an ideal situation where on our end we're ready, and Keith is excellent at doing that.
Mm-hmm.
So,
Two other things I wanted to mention is rent payments are at an all-time high. It's very expensive to rent a home these days with the demand, and I think that a lot of folks, when they're talking about all this, they don't think about the ownership and the equity that you build buying a home.
Definitely.
Not only are you not paying rent, which does nothing for you, that gives you a home, which is important, but if you have your own home, you're building equity, you're building ownership in that home. People that have bought a home 10 years ago, they're worth a lot more than they were 10 years ago because of the home they bought. So I think that part gets overlooked.
yeah, because in that loan you've got your interest and your principal. So even though your interest is what you're paying for the privilege of someone else loaning you the money to buy this equity, the home, or build that equity, and then as the home hopefully appreciates in value, and lately they've appreciated quickly. Even if you look at it historically, over a long period of time, homes have appreciated, so that principal of your part of your loan payment is buying down the amount you owe every month. So no matter what, that number is going to get lower and lower and lower, and that's putting money aside for you. Or when you're paying rent at the end of each month, you have zero equity in anything. You do have a home, we have a roof over your head, but you can accomplish that by paying for your mortgage and
You can
still
grab your own sand.
Yeah,
Yeah.
yeah, exactly. That's a good way to put it.
Yeah.
Okay,
Exactly.
excellent.
Excellent.
As far as current marketing conditions, anything you can add to that?
Don't wait. Houses are only going to be more expensive next year.
Yeah.
Good point.
Yeah.
And we're seeing that. Don't wait. Get a hold of us, get the ball rolling, and we're here to help.
That's right. Thank you guys for having me.
Appreciate you.
Keith.
Yeah.
Thanks, Keith.
Yeah.
All right, guys, stay tuned. Thanks.